Price pressures are continuing to ease, with the latest data showing Australia's annual inflation rate has fallen to 2.8%, broadly in line with expectations. The Bureau of Statistics says prices rose by 0.2% in the September quarter compared to a 1% rise in the 3 months through June. Falling petrol and electricity prices drove the drop, but experts still don't expect to see an interest rate cut this year. For more details, we are joined now by David Chow. Dave, take us through the numbers. Was this expected?
Yeah, broadly in line with expectations. If it is a surprise, it's a really minor surprise. I mean, markets were expecting inflation to fall to 2.9%. We got 2.8% instead. So it's a very minor difference. So this chart helps to keep things in context for those who are confused by the numbers I'm spouting. So 2.9% was the forecast. And notice the shaded area, that's the 2 to 3% inflation target range that the Reserve Bank is aiming for. So that's the sweet spot. And the significance of today's figures of the 2.8% inflation rate is we've fallen into that sweet spot for the first time in about 3 years. And especially, it's come down a lot, especially in the past couple of years. You'll notice back in December 2022, inflation peaked at nearly 8%, which was the biggest cost of living crunch in 3 decades. And when we take a deeper dive into this headline figure, what caused inflation to fall so much, as you mentioned, was the government's energy bill rebate. So that caused electricity prices to fall 17% in July, August and September. And petrol prices fell about 7% during that quarter due to weaker global demand for oil and slowdown in the global economy. So there's some commentary from the ABS here. They say the Commonwealth Energy Bill Relief Fund rebates in all states and territories, as well as the state government energy rebates in Queensland, WA and Tasmania, that led to the large fall in electricity prices. And without those rebates, electricity prices would have increased by 0.7% for the quarter. So it's pretty much down to the electricity rebates, Ruby.
And Dave, what does all this mean for interest rates?
Well, very, very few people are expecting an interest rate cut this year. In fact, when we look at money market figures, there's only a 9% chance of an interest rate cut at next week's Reserve Bank meeting, 27% chance by the end of the year. So those are really low odds. And one reason for that is those inflation figures, the ones that we've been reading out, the headline figures, I guess, have been artificially lowered by the electricity rebates. Once they wear off, electricity prices and inflation are likely to start rising again a bit. So the Reserve Bank is looking at another measure of inflation called trimmed mean, also called underlying inflation. It ignores the most volatile items, usually food and energy. So trimmed mean inflation was 3.5%, which is higher than the Reserve Bank's target band. So that's why a rate cut isn't expected to happen anytime really soon. Now, a short time ago, I did speak to the EY chief economist, Sherelle Murphy, and I asked her for her interest rate predictions, and here's what she said.
I don't think we will see a rate cut this side of Christmas, unfortunately. Obviously, for those with a mortgage, it would be nice to see that. But I think that come the first quarter of next year, as long as those underlying inflation numbers continue to dissipate, then the RBA will be able to start cutting next year.
So Ruby, no Christmas rate cut, and first quarter of next year, possibly we could see a rate cut according to Sherelle Murphy. So it looks like we might have to wait a little bit longer.